Hi, this is Matt at Vault Insurance and Investments. I just wanted to send out a quick video. A friend of mine sent me this chart a few weeks back and I thought it was helpful and I wanted to send it on to you. 95 reasons why people did not invest in the stock market. And there's obviously plenty of reasons not to invest. Basically 95 reasons are referencing one news event, I'll say that year, so 95 years. And we can easily make that 100 just with what we've been through the last few years here. Basically, it says there are plenty of excuses for not investing in the stock market. Despite all the events listed below, $1,000 invested in large company stock in January of 1928 would have grown to over 2.5 million at the end of Q1 2022. It's easy to find reasons not to invest. And I'll just kind of let you look at some of these here for those that aren't going to click on the PDF. Many things, from A to Z, and I'm not gonna read those, but do take a minute and just kind of glance at that if you have time. And the reason I wanted to do that is because it just seems like, nonstop, not every day, but depending on, what's in the news, often it's doom and gloom. And when we have a lot of the doom and gloom, every time there's doom and gloom, it's the same advertisements that I hear, and I wanted to touch base on that. So for example, here I have a article. It's fairly old, but it's a visual history of market crash predictions. And it's just talking about really the doom and gloomers. And I'll see if I can put this on the camera here. Roughly 25 predictions. And going back, this is from 2010 to 2015. So just a 5-year window, 25 doom and gloom predictions. And basically 24 of them, did not come true. And the one that was negative was at the middle of a Dow drop, and obviously since then we're ahead of the game. But the people that are in this article, I'm not going to say names, but famous people saying the world's coming to an end. Some of them, one of the guys actually had his own mutual fund for a while, saying, hey, the stock market's going to tank, but buy my stock, right? Buy my mutual fund. And the beginning of the article, it makes a good statement, and it says, always remember how people make money, right? And that's a good segue into the next thing I wanted to talk about, and that is, every time I turn on the radio, I hear ads for buying gold or buying life insurance or buying annuities, right? And I'm not against those things. Those things can be great. But keep in mind, gold peaked in 2020. So I'm going to say that again because it's a surprise. Gold peaked in 2020. The other ad I hear is for life insurance. I am a fan of life insurance for the right person, set up the right way with the right product. I know that may be a little bit of surprise because most of the people that I work with, I haven't brought that up. And the reason that is because it's for all the parameters need to be in line for a cash value life policy to work for you. And one of those being time. You need to ideally put away money for 10 years. And there's lots of good products, lots of products I'm not fond of. I'm not going to get into that. That's a whole nother video, but just keep that in mind. The other thing is annuities. Annuities are very confusing because there's different types of annuities and different purposes for annuities. So when we hear the negative by certain pundits, it's usually talking about variable. And I'll say, I don't do variable. I'll just be very direct. The fees are high. And I think, generally speaking, for most people, we can do other things that will achieve the objective in a more favorable way over time. But there are fixed annuities. Fixed annuities are no-fee annuities that can pay, let's say as high as 4% for a 5-year period, right? And that would be more for like excess bank money, beyond reserves, beyond your 3-6 months reserves at the bank, but you still want it to have reduced risk, but you want to beat inflation. You can get a fixed 4% roughly annuity for a 5-year period. And again, that's going to beat inflation over the long-term average, obviously not for this year, but definitely better than the bank. And the other type of annuity would be what we call an indexed annuity, where it has a guaranteed floor of 0. So when the market goes down, you don't lose. But when the market goes up, you can participate in the gain, either up to a cap or a percentage or a participation rate on the gain. So usually not 100% of the gain, but the big thing being the guaranteed floor of 0. And I point that out because annuity companies have received massive amounts of applications right now, understandably so. But I just want to point out that is something to consider for excess bank money, but not for normally for your growth money. The stock market's down, it dropped. It is going to come back. You don't want to take, lock in your losses, if you will, and move it to a product where you might get 4%, right? Just not what I would generally recommend. That being said, this is just a general overview. Reach out to us for questions. And let's see what else here. A couple things to consider before the market does come back. If you haven't funded your IRA yet, I would definitely consider that because stocks are still generally speaking on sale. That would also include doing a Roth conversion if you haven't done that yet. On that note, I did hear about someone that converted their whole account. It was someone that just did it on their own. They had a friend tell them to go do a Roth conversion, and this person converted, all of their account. Not the way to do it. Anyway, we're here. If you have any questions, give me a call. I am going to be getting on a plane today and heading out for the rest of the week. I'll be at the annual Brookstone Advisor meeting. While I'm out, there are people here at the office, Andrea Nelson specifically, that can help with all things. The office number is 425-256-3105. That's 425-256-3105, or just send us an email. I'm looking forward to seeing you and catching up with you. And one last slide here, I'll just leave on a good note. This is my son, Jake. He's 10 years old. That's Grandpa in the background. This is Lake Lytle off the Rockaway Coast in Oregon. And that's his first fish that he caught. It was pretty cool, a lot of fun. Anyway, you guys are awesome. Take care. Call me anytime. Thanks.